Preparing for a finance manager at Heineken interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to become a finance manager at Heineken? Heineken appeals to me because finance is closely connected to brands, customers, supply chains, and markets worldwide. I would bring strong planning, analysis, control, and stakeholder management skills while developing a team that challenges decisions constructively. The role also fits my ambition to move beyond reporting and influence profitable growth, cash generation, and disciplined investment. I am particularly motivated by Heineken's global footprint, entrepreneurial operating environment, and emphasis on long-term value rather than short-term results alone. While answering, connect your finance expertise with Heineken's international scale, premium brand portfolio, commercial complexity, and purpose-driven culture. Demonstrate genuine interest in business partnering, people leadership, and turning financial insight into sustainable performance. Question 2. How would you build a reliable annual budget and rolling forecast? I would start with business drivers rather than simply applying last year's percentages. For Heineken, that could include volume, price, mix, promotions, input costs, logistics, headcount, and working capital. I would agree assumptions with commercial and operational owners, model base, upside and downside scenarios, and document accountability clearly. Each month, I would compare actuals with forecast, isolate operational versus timing variances, update the outlook, and explain the actions required to close emerging gaps. Make sure to cover driver-based planning, ownership by budget holders, historical analysis, commercial assumptions, scenario modeling, monthly reviews, variance explanations, and discipline challenge. Emphasize that forecasts should support decisions, not become static administrative exercises. Question 3. How would you explain a significant unfavorable gross margin variance to a commercial director? I would first quantify the variance bridge, separating volume, price, mix, promotions, raw materials, packaging, freight, and foreign exchange. Then I would distinguish permanent trends from timing or accounting issues. For example, a favorable price increase could still be outweighed by premium brand mix deterioration and higher aluminum costs. I would present the analysis visually, validate it with sales and operations, and recommend actions such as repricing, pack optimization, procurement mitigation, or revised promotional investment. In your answer, talk about decomposing price, volume, mix, discounts, materials, freight, currency, and accounting effects. Show how you would use facts, communicate commercially, identify root causes, and recommend specific corrective actions. Question 4. What financial KPIs would you monitor in a brewing and consumer products business? I would combine financial and operational indicators. Core measures would include net revenue growth, volume, price and mix, gross margin, EBITDA, marketing return, market share, inventory days, receivable days, payable days, operating cash flow, and forecast accuracy. I would also monitor brewery utilization, yield, service levels, and packaging or logistics costs. The important point is linking metrics. Volume growth without margin or cash discipline may destroy value, while strong mix and pricing can improve returns even in a flat market. Be sure to mention revenue growth, volume, price and mix, gross margin, EBITDA, marketing efficiency, market share, working capital, cash conversion, leverage, forecast accuracy, and operational measures. Explain how KPIs connect to decisions rather than listing metrics. Question 5. Describe how you would manage the month-end close while maintaining accuracy and speed. A strong close begins before month-end. I would maintain a clear timetable, assign owners, identify material judgments, and use recurring checklists for accruals, provisions, inventory, fixed assets, intercompany balances, and reconciliations. I would prioritize high-risk accounts and automate routine validations where possible. After review, I would investigate unusual movements instead of accepting unexplained variances. I would also hold a short post-close review, recording root causes and process improvements for the next cycle. Focus on a documented close calendar, materiality, reconciliations, accruals, intercompany balances, review controls, automation, issue escalation, and post-close improvement. Show that you balance deadlines with reliable numbers and transparent judgments. Question 6. How would you improve working capital at Heineken without damaging customer relationships? I would begin by mapping the cash conversion cycle and identifying whether the main issue is inventory, receivables, or payables. For inventory, I would improve demand forecasting, SKU segmentation, safety stock logic, and slow-moving stock actions. For receivables, I would segment customers, strengthen dispute resolution, and align credit limits with risk. I would avoid blunt payment term changes that damage relationships or supply reliability. Progress should be tracked through cash released, service levels, overdue balances, and inventory health. In your answer, address cash conversion, inventory segmentation, customer terms, collections, supplier collaboration, service levels, forecasting, and cross-functional ownership. Demonstrate that working capital improvement must protect revenue, availability, quality, and long-term relationships. Question 7. How would you evaluate a proposed price increase for a Heineken brand? I would evaluate the proposal through a price-volume mix model, not a simple percentage increase. I would assess consumer elasticity, competitor pricing, channel economics, customer margins, promotional intensity, brand positioning, and likely trade-down behavior. I would model several scenarios including partial volume loss and mix changes, then compare incremental gross profit and market share risk. After implementation, I would monitor realized price, volume, distribution, promotions, and competitor responses, adjusting the approach by channel or market where necessary. Make sure to cover elasticity, competitor pricing, customer margins, volume and mix effects, channel differences, promotions, brand strength, inflation recovery, scenario analysis, and implementation monitoring. Include both profit and market share consequences. Question 8. Tell me about a time you challenged a senior stakeholder using financial analysis. In a previous role, a commercial team proposed extending a customer promotion based on strong shipment growth. I analyzed sell-out data and found that much of the increase reflected inventory loading, while realized margin was below plan. I presented the facts without criticizing the proposal, suggested a narrower promotion tied to consumer demand, and agreed monitoring measures. The revised plan protected contribution and reduced excess inventory. That experience reinforced that effective challenge combines evidence, respect, and practical alternatives. While answering, use a concise star. Question 9. How would you manage foreign exchange risk in an international beverage business? I would first distinguish transaction exposure, translation exposure, and longer-term economic exposure. I would work with treasury and local finance teams to forecast currency flows, identify natural offsets, and apply the approved hedging policy consistently. For business decisions, I would show sensitivities for key currencies and explain effects on revenue, costs, margins, and cash rather than focusing only on reported profit. I would also separate genuine operational performance from exchange movements, ensuring management receives a clear underlying view. In your answer, distinguish transaction, translation, and economic exposure. Discuss forecasting currency needs, hedging policy, natural offsets, pricing responses, sensitivity analysis, accounting impacts, and coordination with treasury and local businesses. Question 10. What would you do if sales were above budget but cash flow was significantly below plan? I would reconcile operating profit to cash flow and avoid assuming that higher sales means stronger cash generation. I would investigate customer collections, extended terms, disputes, inventory build, promotional funding, taxes, capital expenditure, and supplier timing. I would compare shipment growth with sell-out and days outstanding to identify revenue quality issues. After validating the data, I would communicate the short-term cash risk, agree collection and inventory actions, and update the forecast with a clear bridge to management. Be sure to mention investigating revenue quality, receivables, inventory, payment timing, promotions, taxes, capital expenditure, and one-off items. Explain how you would reconcile profit to cash, validate data, escalate risks, and recommend immediate and structural actions. Question 11. How would you ensure compliance with international financial reporting standards and strong internal controls in a fast-moving business? I would translate accounting policies and control requirements into practical process ownership. Key areas would include revenue recognition, inventory valuation, provisions, leases, fixed assets, intercompany balances, journal approvals, and segregation of duties. I would use risk-based reconciliations and management reviews, retain clear evidence, and monitor overdue control issues. When exceptions arise, I would assess materiality, document the judgment, involve technical accounting or audit specialists when appropriate, and fix the underlying process rather than repeatedly correcting symptoms. Focus on risk-based controls, accounting policies, segregation of duties, reconciliations, evidence management review, estimates, audit readiness, training, and remediation. Show that controls should be embedded into processes without unnecessarily slowing commercial execution. Question 12. How would you lead and develop a finance team with different levels of experience? I would begin by clarifying responsibilities, priorities, service expectations, and decision rights. I would assess each person's strengths and development needs, then combine structured coaching with meaningful delegation. Junior team members might own reconciliations or analysis with review, while experienced colleagues lead business partnering or process improvements. I would give regular, specific feedback and encourage constructive challenge. During close or forecast cycles, I would protect quality through clear escalation, cross-training, and visible workload management. In your answer, discuss clear expectations, role design, coaching, delegation, feedback, technical development, succession planning, psychological safety, accountability, and adapting your leadership style. Include how you would maintain standards during busy reporting periods. Question 13. Describe a finance process you improved through automation or better data. I replaced a manual reporting pack that required multiple spreadsheet consolidations with a controlled dashboard using standardized data and automated refreshes. I first mapped the process, removed duplicate metrics, agreed definitions with stakeholders, and designed validation checks before implementation. The reporting cycle became 2 days faster, manual errors declined, and managers could drill into volume, price, mix, and margin drivers. I retained review controls and documentation because automation only creates value when the underlying data and ownership are reliable. Make sure to explain the original pain point, root cause, solution, stakeholder involvement, control considerations, measurable benefits, and lessons learned. Quantify time saved, error reduction, faster reporting, or improved decision usefulness where possible. Question 14. A major packaging cost rises unexpectedly during the year. How would you respond? I would quantify the exposure by product, market, contract, and remaining forecast period, then distinguish temporary from structural cost pressure. I would work with procurement on supplier negotiations, specifications, volume commitments, and alternative materials, while operations assesses quality and availability implications. Commercial teams could evaluate pricing, pack size, mix, or promotion changes. I would model scenarios and communicate the margin and cash impact clearly. Finally, I would update the forecast and track mitigation actions with accountable owners. While answering, cover immediate impact assessment, supplier and procurement discussions, scenario modeling, pricing and mix options, specification changes, hedging or contracts, forecast updates, and transparent communication. Balance margin protection with quality, availability, and brand requirements. Question 15. What would your priorities be during your first 90 days as finance manager at Heineken? During the first month, I would listen and learn, understand the strategy, performance drivers, reporting calendar, control environment, team capabilities, and expectations of commercial and operational leaders. In the second month, I would validate the forecast, KPI definitions, major risks, and key processes through data and stakeholder discussions. By the third month, I would deliver a few practical improvements, such as clearer variance reporting or faster reconciliations, while agreeing a prioritized roadmap aligned with Heineken's growth, cash, and people objectives. Be sure to mention listening, stakeholder mapping, understanding strategy and performance drivers, reviewing controls and close quality, assessing team capability, identifying quick wins, and building a longer-term improvement roadmap. Avoid promising changes before understanding the context. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.